Hello dear students, welcome to Devika's Commerce and Management Academy. Internal Reconstruction, one of the important chapter in accountancy. Reconstruction. Reconstruction is not exactly building, but some kind of changes in the organization due to losses. Whenever company is getting loss, it's in huge losses, then they wanted to reconstruct something, means some kind of alterations or changes they wanted to do. That is internal reconstruction. That is the meaning. You may be having a doubt. Internal reconstruction means what is external reconstruction, madam? You can say it as a reconstruction is of two types: internal reconstruction and external reconstruction. Here I have written. Reconstruction means some kind of changes, alterations that can be done internally and externally. Internal reconstruction, external reconstruction. Internal reconstruction means inside of the organization itself only, same company, same methodology, but some kind of changes they are doing. Company is same, so same old company. No changes in the company. Company is same, but with internal changes. The small internal changes they wanted to do inside of the organization. So that's called as internal reconstruction. Second one, external reconstruction, is old company dissolves. There is no old company is here, dissolves, and new company forms. New company forms. Say for example, XYZ company is there. It's in huge losses. Huge losses. This is taken by some PQR company. PQR company purchased it. Then this is external reconstruction. When PQR company has taken this XYZ company, PQR company is going to do lots of changes. Lots of changes. So that is external construction. In internal construction, same company. Suppose that this is ABC company. Same company continues, no changes, same company. But here changes are that one company is purchased or amalgamation by another company. So this comes in the another chapter, amalgamation. Okay. So there we are going to find this external reconstruction. Anyhow, if you see internal reconstruction, external reconstruction, small difference you have to find. In internal construction, liabilities can be made a little bit changes. It will be inside of the organization, lots of changes they can do it. But in external reconstruction, all the liabilities has to pay off because purchasing by another company. So all the liabilities has to pay off. Here we can do some changes inside only. Need not to pay off all the liabilities. This is the major difference. Okay. So now in this chapter we are going to talk about only internal reconstruction. Company is not selling, company is not amalgamation with another company. It is with the same company only. Whenever company is getting losses. So that losses, they just wanted to reduce it. They just wanted to make some kind of alteration so that it can be shown in the balance sheet that losses are not there. Some kind of alterations they do. With that alterations, they wanted to show that there's no loss, company is okay. They wanted to pretend, means presenting the balance sheet in a proper way so that the viewer is going to find that there's no loss. Internal changes they wanted to do. So that is why we say it as internal construction. Here a few points you have to remember. One thing is that no liquidation here, no liquidation, but accumulated losses and fictitious assets. Mainly remember these 2 points: accumulated losses and fictitious assets. These two things are written off. These two things are written off, means we have to write off. Written off by reducing the capital of the firm. These two we are writing it off. Means ultimately which is reducing the capital of the firm. Which is reducing the capital of the firm. This is the first point you have to remember. Second thing is, shall I repeat once again? No liquidation here, same company continues, but all accumulated losses and fictitious assets. These two things are written off by reducing the capital of the firm. Capital we are reducing. Now here you will say it as a internal reconstruction or capital reduction. Internal reconstruction or capital reduction, both are same. Yeah, rather than using internal reconstruction, we can use the word of capital reduction, which is nothing but internal reconstruction means nothing but we are reducing the capital. Liability, capital means liability. That capital or liability we just wanted to decrease it down, reducing it. So that is why both are same. And remember another thing, for capital reduction, company has to pass a special resolution. It's not so easy, capital reduction. Say internal changes they wanted to do, internal reconstruction they wanted to do. So internal construction means what do? Capital should be reduced. How to reduce the capital? They had to pass the special resolution. They want to get the permission from the company. Then certain formalities they have to file, they have to complete, they have to fulfill. Then after that they are eligible to reduce the capital. Capital reduction or internal reconstruction is possible. Am I clear about this? Now, why internal construction? What is the need of internal construction? 4 points you have to remember. Need of internal construction or need of capital reduction. Anything you can say. We'll use the word of capital reduction. It will be easy for you. Capital reduction, capital reducing. Why? What is the need of that? Simply 4 points remember. First one is to show true and fair view of business. They just wanted to show it to the everyone that company is fair. If we remove the losses, if we reduce the liability, automatically company looks better. Would you agree? So this is what they wanted to do, show the true and fair value of the business. This is one point. Another one is to remove accumulated losses and fictitious assets from the balance sheet. In balance sheet, when you find accumulated losses, anything is there. This accumulated losses and fictitious assets, both the things we wanted to reduce it. This is another important need and required thing. And to remove worthless intangible assets. They wanted to remove this. What is this? Worthless, useless, not much useful, worthless intangible assets from the balance sheet. Intangible assets, in fact, directly if you see, it's not asset. It's not asset. We have created intangible, not visible. So this kind of intangible assets, what do we want to do? We wanted to remove it. Are you getting it? So to remove worthless intangible assets from the balance sheet, no, we don't want to keep it in the balance sheet. And another one is to provide proper valuation. To provide proper valuation of tangible fixed assets. Proper valuation means tangible fixed assets. Tangible fixed assets means, you know, plant and machinery, building, premises, okay, which is furniture, which is visible and fixed. This kind of things we also value. They wanted to show it properly, proper valuation. So these are the main 4 mottos for this internal reconstruction or capital reduction. Now here you have to remember few journal entries. Very easy to remember. Journal entries. Important journal entries, only 5 journal entries are there. If you understand the first journal entry, rest of the 4 journal entries are same like first journal entry. Just focus for few minutes. Journal entries. For what? Internal reconstruction. Internal reconstruction means we wanted to reduce the liabilities. How do we reduce? What are the liabilities? Just recollect it. In liability side, you will find shares. Shares means preference shares, equity shares. Debentures also you will find. So, and creditors will be there. So, all these things we wanted to reduce it. If you reduce it, automatically balance sheet look efficient, strong, no tension. So, in journal entries, whenever we wanted to reduce the liabilities, for that we'll be passing one journal entry. First journal entry is here. When value of equity shares reduced. Equity shares we wanted to reduce it. When we wanted to reduce equity shares, the entry is equity share capital account debtor to equity share capital account to capital reduction account. Both the sides equity share capital is there. Downside capital reduction account we are saying. Very easy to remember. When equity shares are reducing, tell along with me, say When equity share capital is reduced, the entry is equity share capital account at R to equity share capital account at R to capital reduction account. So why 2 times? This is the total amount. Old one. You can say it as a this is old one. For example, equity shares are 2 lakh rupees. 2 lakh is old one. We wanted to reduce it to 1 lakh. 1 lakh. When we wanted to reduce it to say 1,25,000. We want to reduce it to 1,25,000. So how much we wanted to reduce? We wanted to get it to the 1,25,000. That is new one is here. Example 2 lakh we are saying, and this new one is we wanted to bring it to the 1,25,000. It means 1.25 lakh. To capital reduction. Capital reductions means difference between the old one and new one. How much it was? 2 lakh. How much we are bringing down? 1,25,000. Difference is how much? 75,000. Very good. You're perfect. So this is difference. Difference means how much? 75,000. Okay. If you understand this, rest of the journal entries are easy. Able to? When we wanted to reduce the equity shares. Entry is equity shares account at R to equity shares account to capital reduction. This one is old one. What was the original value of the equity shares? And how much you wanted to bring it down, that comes on the credit side. Okay, equity share capital at R to equity share to capital reduction. Capital reduction means nothing but difference of old and new. In the same fashion, here it was equity shares reduced. Second one, when preference shares reduced. When preference shares reduced, very easy. Here equity shares. Now here it will be preference shares. Replace equity shares with the preference shares. That's all. Now preference shares capital, need not to see the journal entry of the preference share capital account at R to preference share capital account to capital reduction account. Easy na? So this is also same like this. Okay, here also old value, new value and difference. And third one, there equity shares and preference shares reduced. Now here debentures reduced. Debentures reduced means we'll replace that equity shares to debentures. Debentures account at R to debentures account to capital reduction account. Easy na? Same like this one only. Only we are replacing the equity shares, preference shares, debentures. Okay. And fourth one, this is also. Now here, when the value of creditors reduced, creditors value we are reducing. Same like this one. We'll replace equity shares to creditors. Creditors account at R to creditors account to capital reduction account. How much was the old creditors? That will write. How much we are decreasing? This will write here. 2 creditors. 2 reduction means what is the difference between the debit and credit amount? That will be the capital reduction account. Am I clear? 4 entries. Very easy. Reduction of preference shares, equity shares, reduction of preference shares, reduction of debentures, and reduction of the reducing the creditors. Any of these cases, you will be writing that whatever you are reducing, that is debit and credit also both. And also we are passing another one, that is capital reduction on the credit side. For any of these journal entries, narration will be same. What is the narration? Being reduction in equity shares, whatever it may be, you have to write it over there in the blank. Being reduction in preference shares or equity shares or debentures or creditors, whatever it may be, that will write here. Being reduction in preference shares and balance transfer to capital reduction account. Being reduction in debentures and balance transferred to capital reduction account. Balance, the difference between these two we are transferring to capital reduction. So that is what we are saying. Being reduction in whatever it may be, that, and balance is transferred to capital reduction account. This is the entry. One entry if you learn, the rest of the 3 entries are easy. 1 plus 3 offer. Okay, now next fifth entry. This you have to be very careful and easy also. Fifth entry is here. When capital reduction is utilized, when capital reduction, this we have capital reduction, this amount 1, 2, 3, 4. When capital reduction, these amounts we are going to utilize it. When capital reduction is utilized, means total of that 4. Total of capital reduction. Remember this. This is the capital reduction total. This total 1, 2, 3, 4. Capital reduction utilized for what? For what we are utilizing? Utilizing for writing of accumulated. We are writing it off this amount. This total amount is writing off writing of accumulate losses and fictitious assets. So this is we are utilizing to writing of the accumulated losses and fictitious assets. These two we wanted to write off. For that purpose, this capital reduction amount is utilizing. Here in four entries, capital reduction was credited. This is we are utilizing. So it comes on the debit side. Capital reduction account debtor. How do you got this amount? Total of these 4. Okay, that we are writing. This you are utilizing to write off. Write off what? One is profit and loss account. Every time you will find this. Pakka, 100%. Okay. To profit and loss account. To preliminary and other expenses you see. Other like preliminary expenses. All intangible assets will be taking. And any fixed assets are reducing, that also will take. Means whatever we wanted to reduce the asset side, that we are writing here. In asset side only you will find profit and loss account. So that we are writing preliminary expenses and patents and trademark, goodwill. These 3 are intangible assets. Intangible assets we are writing. And discount on issue on shares are a discount on issue of debentures. This is loss. So what we are doing, we are accumulating the losses and fictitious assets. Loss we are taking. And also other assets. What are the other assets? Tangible assets, fixed assets. When you are reducing it, machinery reduced, building reduced, like depreciation, what we have, what we used to do. So those assets, other assets, individually you have to write to machinery, to furniture, whatever is given in the problem. So that lastly we'll say to capital reserve account. Capital reserve account means the difference between the capital reduction and all these write-off amounts. This will be the balancing figure. This will be the balancing figure. That's all. This you have to remember. What is this entry? When capital reduction is utilized for writing off, what you are writing off? Accumulated losses and fictitious assets. So far capital reduction was credited. Now we'll debit, because this amount we are going to utilize to write off the assets and any other expenses you will find. So that is why there it was capital reduction credited, now it is debited. Capital reduction account to all these things. Remember, profit and loss account, preliminary expenses, discount on issue of shares, discount on issue of debentures, goodwill, patents, trademarks, other assets, if any other assets are given. So all these things will write. And lastly we'll be saying capital reserve. Please remember this, capital reserve. Capital reserve means what? The difference between this will be always more. Debit side amount will be always more. This minus all these amounts will be the capital reserve. Clear? Very easy chapter. So far whatever I taught you today, remember. Now for this, what is the narration you'll write? Being the reduction amount utilized. Being the reduction amount utilized for writing off each and every item you have to write. Narration will be very less, but very lengthy. But it is easy. What do you say? Being the reduction of amount utilized for writing off. It is here only. Being the reduction amount is utilized for writing off whatever you find it. That's all. Am I clear? Journal entries and understand what is internal reconstruction. That's all. Next class we will work out problems. practical problems will take. By the way, want to take screenshot? Yes, go ahead. Stay connected, check out the playlist, and whatever is useful, use it, and don't forget to forward these videos. And your comments, your encouraging words are going to work like a tonic for me for preparing more chapters in our channel at the rate free of cost. Do comment, do share. So stay connected, practice well. Good luck.